Now, you've been saving in your retirement account for years. There's going to be a time, though, in the future when you have to start taking that money out. The government calls that a required minimum distribution, or RMD for short. Let's walk through some of the mechanics so that you feel knowledgeable and educated about it. So this impacts those pre-tax accounts. So pre-tax, again, are the tax-deferred or traditional accounts. We're going to use an IRA as an example. So when you put the money in, the government gave you an incentive. They allowed you to reduce your taxable income or get a deduction on your tax return. Now they're waiting for their tax revenue. And they say at a certain age, that has to start. So there's two different rules here. Those in the past, we're looking at age 70 and a half. For those that haven't reached age 70 and a half yet, it's a new rule. It's age 72. And let's walk through this in a chart. I want to lay it out so it's real obvious and easy to understand. So in a calendar year, let's use the assumption someone turns 72 in September. So that's noted here by RBD, required beginning date. So they turn 72 there. They have an option for their very first distribution. They can decide whether they take it in that year or if they wait until April 1st of the following. So that's only on your very first distribution. So the year that you turn 72. Every year thereafter, it has to happen in the calendar year. You could take it monthly, you could take it once. So I'm just showing it here happening at the end of the year. Year 2, you take your distribution by 12/31. Year 3, you take it by 12/31. Every year thereafter, it has to happen by the end of the year. That's called satisfying your RMD requirement. So the money comes out, it's now taxable. Now that you've been saving in your retirement account for years, there comes a time where you have to start taking that money out. The government calls this your required minimum distribution, or RMD for short. Let's look at a timeline here so you understand when that has to take place and what you do. So in the year that you turn 72, in our example here, I'm just saying September, October-ish, this individual turns 72. They are required to take the money out. On their very first distribution, they can decide if it happens by the end of that year or if they wait to the grace period of 4/1 of the following year. So you have two options. Every year thereafter, so year 2, it has to come out by the end of the year. Year 3, it has to come out by the end of the year. You could take it monthly or you could take it quarterly. As long as you satisfy it, meaning you withdraw the money by the end of the year, you've met your RMD requirement. So circling back, looking at your very first year, it really depends on what you have going on. So circling back and looking at that very first distribution, it will depend on what you have going on. Whether you're still working, whether you're collecting a pension, you have other income which will drive up your taxable income, whether you take it one year or the next. It may make sense to take it right now, or it may make sense to wait. In that second year, though, you're going to have two distributions at the same time. So there's a lot going on here. We love doing this. We love laying out a plan and a strategy and helping you decide which option makes the most sense for you. So if you need help, please feel free to reach out. We'd love to help you.